Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Illinois Tool Works Inc. quarterly report. Illinois Tool Works Inc. offers a diverse range of businesses and services across various industries. Some of the key areas include automotive components, plastic and metal parts, fasteners, assemblies, food equipment, warewashing, cooking, refrigeration, food processing, test and measurement equipment, welding equipment and consumables, polymers and fluids, adhesives, lubricants, cutting fluids, construction products, engineered fastening systems, beverage packaging equipment, product coding and marking equipment, appliance components and fasteners. The company serves a wide range of markets, including automotive OEM and aftermarket, commercial food equipment, construction, general industrial, consumer durables, and MRO. Its products are distributed directly to industrial manufacturers as well as through independent distributors. The Illinois Tool Works Inc. (ITW) stock price has demonstrated relative stability over the past year, with minor fluctuations in its annual performance. Several factors have contributed to this stability, including consistent dividend increases and share repurchases, signaling financial health and shareholder-focused solid earnings reports, despite some mixed results. Supported by strategic execution and record operating margins, robust operating margins, driven by enterprise initiatives, focusing on operational efficiency and cost reduction, a diversified and resilient business model, providing resilience against market volatility and supporting strong margins, a long-term growth strategy focused on customer-backed innovation to drive above-market organic growth, while the Q3 2025 earnings report led to a stock price drop of -5.1%. These underlying strengths have generally prevented sustained, significant stock price drops, exceeding -1.98% for most of the period from late 2024 to late 2025. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth is primarily driven by long-term supply agreements with OEM auto manufacturers, organic business growth in the automotive OEM segment, and general industrial market growth in the welding segment. Additionally, higher demand in electronics in the Asia-Pacific region and favorable foreign currency translation have contributed to revenue growth. On the other hand, revenue decline can be attributed to limited circumstances involving installation of equipment and customer acceptance in the test and measurement and electronics segment, as well as lower demand in residential and commercial construction markets in the construction products segment. The polymers and fluids segment has also experienced a decline due to decreased demand in automotive aftermarket and general industrial markets. The specialty products segment's revenue growth is mixed, with limited information provided on primary drivers of revenue growth or decline. Overall, these factors have contributed to the company's revenue growth and decline trends. The company's financial performance indicates a strong ability to generate positive operating cash flow, with net cash provided by operating activities totaling $2,163 million and free cash flow of $904 million in the 3 months ended September 30, 2025. It is clear that the company has sufficient liquidity to meet its obligations and invest in growth opportunities. This positive trend suggests a healthy financial position for the company. The company's debt level has experienced a significant change over the past year. The total debt increased from $7.863 billion in 2024 to $8.942 billion in 2025, representing a 13% rise. This substantial increase indicates that the company's financial obligations have grown. In contrast, the interest expenses have remained relatively stable. Despite a slight increase of $4 million from $53 million in 2024 to $57 million in 2025, the overall trend shows minimal change. The interest expenses for both years were also comparable at $69 million and $283-285 million respectively. The company's financial performance varied across different segments in 2025. Notably, the automotive OEM and food equipment segments showed significant growth, with revenue increases of 7% and 2%, respectively. In contrast, several segments experienced declines in revenue, including welding, -3%, construction products, -2%, and specialty products, -3%. The test and measurement and electronics segment saw a minor decrease in revenue, but a more substantial decline in operating income. Similarly, the Polymers and Fluids segment reported a slight drop in revenue, accompanied by a notable decrease in operating income. However, automotive OEM, food equipment, and construction products segments outperformed others with increased operating incomes of $32 million, $9 million, and $4 million, respectively. Management is emphasizing the importance of organic growth as a core strength for the company. This will be driven by innovation that meets customer needs. The company will prioritize high-quality businesses with long-term competitive advantages and focus on industries with positive macro fundamentals. To maintain its financial stability, ITW plans to manage debt through commercial paper and term loans while maintaining a strong financial position. Acquisitions and divestitures overview. In recent years, Illinois Tool Works, ITW, has engaged in strategic acquisitions and divestitures to enhance its growth potential. On the acquisition front, ITW made two notable purchases in the test and measurement and electronics segment for $57 million and $59 million, respectively. These deals are expected to supplement ITW's long-term growth prospects. In contrast, the company has also been actively divesting certain businesses and product lines. This includes exiting commoditized products and customers within its divisions, allowing ITW to focus on high-value offerings that differentiate it from competitors. Additionally, ITW sold a non-controlling interest in Wilsonart International Holdings, LLC, further streamlining its operations. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In recent years, the company has paid dividends in 2024 and 2025, as detailed on pages 6 and 32 of the financial summary. Additionally, the company has also engaged in share repurchases, with details available on pages 6, 32, and 36. The concerns about inventory buildup and supply chain disruption are valid based on recent trends. A significant decrease in inventories, minus $48 million, suggests that companies may be struggling to manage their stock levels effectively. Additionally, an increase in accounts payable, $60 million, indicates that businesses may be relying more heavily on credit to maintain operations. The introduction of tariffs has also introduced uncertainty, potentially impacting overall demand from customers. Furthermore, raw material price increases, supply shortages or delays, and potential negative effects of service interruptions pose additional risks to the supply chain. These factors collectively contribute to concerns about inventory buildup and supply chain disruption. That concludes the financial summary for Illinois Tool WORKS Inc. Feel free to comment below, and I will be happy to answer them when possible.